This report is from today's CNBC Daily Open, our new, international markets newsletter. CNBC Daily Open brings investors up to speed on everything they need to know, no matter where they are. Like what you see, you can subscribe here. First day jitters U.S. markets mostly fell on 2024's first day of trading, with the Nasdaq Composite having its worst day since October. Meanwhile, U.S. Treasury yields climbed. Asia-Pacific markets declined Wednesday. South Korea's Kospi retreated around 2%, leading losses in the region. But Hong Kong-listed shares of Chinese online gaming firms rose on news China had removed an official overseeing gaming regulation. Apple falls. Apple shares fell 3.58% after Barclays downgraded the stock to underweight. Furthermore, the bank trimmed its price target for Apple from $161 to $160. Ripple effects were felt across the Pacific by Apple suppliers. Shares of Taiwan Semiconductor Manufacturing Company, Hun High Technology Group, also known as Foxconn, and Samsung Electronics all retreated during Asian trading hours Wednesday. Extended shipping detour Maersk will pause all shipping through the Red Sea and Gulf of Aden until further notice, the company announced, after one of its vessels was attacked by Houthi militants based in Yemen over the weekend. The Danish shipping giant's decision highlights how the U.S.-led initiative to safeguard passage in that area, called Operation Prosperity Guardian, is facing challenges. Oil prices fell Tuesday. All that glitters is copper. Rising demand for copper driven by a potentially weaker U.S. dollar and a turn to green energy will drive up copper prices, according to a report by BMI, a Fitch Solutions research unit. In a December report, Citibank forecast copper demand to increase by an extra 4.2 million tons by 2030, which could push up prices to $15,000 a ton in 2025. The metal was last trading at $8,559 a ton. Astonishing strength. Despite China's sluggish economy and woes in its property market, one chief investment officer thinks some Chinese sectors are showing astonishing strength. His advice: don't buy the Chinese economy as a whole, buy the strength, he told CNBC which his favorite Chinese stocks are. It wasn't the upbeat start to the new year that investors had hoped for. The 10-year U.S. Treasury yield added around 8 basis points to 3.941%, approaching the 4% level again, while the 2-year yield was more than 7 basis points higher at 4.324%. That put pressure on stocks. The S&P 500 lost 0.57%. Dashing hopes of a new closing high to start the new trading year, while the Nasdaq Composite retreated 1.63%, its worst showing since October. The tech-heavy index was weighed down as several major stocks fell. Apple shares suffered after Barclays downgraded the company, causing other Magnificent Seven stocks to slip in sympathy. The iShares Semiconductor ETF dropped 3.6%.